Hi everyone, Friday, August 12th. Thank you for joining me for the first installment of 3 Things with Spyglass Lending. And again, this is just for you, just for a select few real estate agents that I want to work with. Let's get right to it. Let's get to the list. Rates since 6%. What do I mean by that? June 6th, that was the date. That was the date that rates actually touched 6%. It spiked all the way up there. That was the day that everything changed in the industry, and it's been 2 months since then, right? And we all know that there's a very different landscape out there. And there's two major things to take away from this. For starters, rates have obviously fallen since then. They've come back down to earth a little bit, depending on loan to value ratios, depending on credit scores, depending on loan programs. You're looking at high 4%, low 5%, and that's back in line with where people want to be. But the expectation is, unfortunately, they're going to creep back up, and that's already happened this week. The 10-year Treasury, well over 3 again. Rates are starting to creep back up. I've seen every single day all the lenders, unfortunately, have had to reprice for the worse. And the second thing that's happened are kind of the two things right below it, and let's get to them. Number 2, lender fallout. Well, what do I mean by that? Take a look at what's already happened in just the past couple of months. Number 1, you've had First Guarantee Mortgage Company, gone. You've had Sprout Mortgage, gone. Loan Depot announced this week. Loan Depot is one of the top 3 wholesale lenders in the country. Guess what? They're shutting down their wholesale division entirely. Starting in October, it's gone. Brokers like myself loved sending to Loan Depot, competing with the retail space, competing with all the big banks out there. They're off the table. That's not necessarily good for anybody. And I would add a fourth in there, Angel Oak. A lot of rumblings about them. They're sitting on a tremendous amount of paper. Who are they? They're the largest non-QM lender in the country out of Georgia. Not everything's so rosy over there, so we're all paying attention to what's happening. And that brings us what's going on in the private money world. That's the other third thing right here. You're going to see the up arrow, the down arrow. What does that mean? Well, up arrow. Interest rates. A lot of private lenders, a lot of hard money funds were really suppressing the rates for the longest time when rates were obviously phenomenal in the 2s and 3s. Their rates at a lot of these lenders were in the 6s and 7s, barely even touching 8s, and they were going up in leverage. And that's kind of speaking to the down arrow over there, that the leverage has changed. A lot of flip lenders were happy giving away 90, even 95% purchase money, all the way up to 100% of the rehab money. Not anymore. Most of them, even for experienced flippers, want to be stuck at 80% or even less than that, while also still raising the interest rates. Gone are the days of that 7 or 8% for those types of loans. We're back in the 9, 10s, and 11s, again, even for experienced investors. So obviously a lot of change out there. I thank you for joining me today. Every Friday I'm going to send out an email like this, and again, it's just going to you. I'm only trying to work with a select few real estate agents. I want to be your guy. I want you to send me everybody you possibly can as a buyer. No matter what it is, the qualified mortgage space, the non-qualified mortgage space, or private and hard money. We do all 3 buckets here. I've been doing them a long time, 15 plus years in the business, and I also make myself available to you anytime. Text, call, email, ask a question. I'm here. I appreciate your time. Thank you.